Most people think taxes are fair. You earn money, you pay your share, everyone contributes equally. The narrative is clean, simple, meritocratic. Work hard, pay your taxes, that's the social contract. But if you look closely, closer than any politician or financial advisor will ever dare, you'll find a different truth. The tax system has two sets of rules, one for people who work for money and one for people whose money works for them. You pay 30% of your paycheck before you even see it. Billionaires structure their empires so they legally pay zero. Not through evasion, through a strategy so elegant, so protected by law, that it's taught in every elite business school and used by every major fortune in America. It's called buy, borrow, die. And once you understand it, you'll never see wealth the same way again. Welcome to Moments Between, where the stories you think you know are never quite what they seem. To understand how billionaires pay no taxes, you have to start with a simple question. What counts as income? For you, income is obvious. Your salary, your wages, money that hits your bank account. And the IRS taxes it immediately through payroll withholding. You never even touch that 30%. It's gone before you get paid. But for billionaires, income isn't salary, it's asset appreciation. The increase in value of stocks, real estate, companies they own. And here's the key, asset appreciation isn't taxed until you sell. If you own $1 billion in Amazon stock and it doubles to $2 billion, you haven't made income according to the IRS. You've made unrealized gains, and unrealized gains are invisible to the tax system. This is the foundation of the strategy. Billionaires don't take salaries, they take stock. Elon Musk's salary at Tesla? Legally $0. Jeff Bezos at Amazon? $81,000 a year, less than a senior engineer. Mark Zuckerberg at Meta? $1. They're not being humble, they're being smart, because salary is taxed as ordinary income at rates up to 37%. Stock appreciation is only taxed when sold, and then at the capital gains rate, 20% maximum. But here's the trick, they never sell, because the moment they sell, they trigger a tax event. So instead, they use the second part of the strategy, borrow. When you need money, you sell assets or work more hours. When billionaires need money, they borrow against their assets. It's called securities-based lending, and it's how the ultra-wealthy fund their lives without ever triggering taxes. Here's how it works. You own $1 billion in stock. You want to buy a yacht, a mansion, fund your lifestyle. You don't sell the stock. That would create taxable income. Instead, you go to a private bank and say, I'll use my billion in stock as collateral. Lend me $50 million. The bank says yes. Why? Because your collateral is worth 20 times the loan. There's no risk. They give you the cash at an interest rate around 2 to 3%. And here's the beautiful part. Borrowed money isn't income, it's a loan. Loans aren't taxed. So now you have $50 million in cash. You spend it. You live like a billionaire. But according to the IRS, you haven't earned a penny. Your tax return shows zero income. You pay zero taxes. Meanwhile, your billion in stock keeps growing. It doubles to $2 billion. You borrow another $100 million against the new value. Still no taxes. The stock grows to $3 billion. You borrow another $150 million. Still no taxes. You're living a billionaire lifestyle funded entirely by borrowed money, and the IRS never sees a dime of taxable income. This isn't evasion. This is the system working exactly as designed. But you might ask, don't you eventually have to pay back the loans? Technically, yes, but here's where it gets darker. You never pay them back. You die. And this is the third part of the strategy, die. When you die, your heirs inherit your assets, and under current U.S. tax law, inherited assets get what's called a step-up in basis. This means the assets are revalued at their current market price, and all the appreciation that happened during your lifetime, all those unrealized gains, disappear for tax purposes. Let's make this concrete. You bought stock for $1 million. It grew to $1 billion over your lifetime. You borrowed $500 million against it and spent that money. You die. Your heirs inherit the stock, and the IRS treats it as if they bought it at $1 billion, its current value. The $999 million in gains erased, never taxed, gone. But what about those $500 million in loans you took out? Your heirs inherit those too. So they sell enough stock to pay off the loans. Let's say they sell $500 million worth. But because of the step-up in basis, the IRS treats this as zero gain. They bought it at $1 billion. They're selling a portion at current value, no taxable gain. They pay off the loans, keep the remaining $500 million, and the entire fortune passes to the next generation without a single dollar of income tax ever being paid. Buy the assets, borrow against them, die and pass them on. Buy, borrow, die. It's not a loophole. It's the fundamental architecture of wealth preservation in America. This is how the Walton family, heirs to the Walmart fortune, has passed down over $200 billion across generations while paying a lower effective tax rate than their store employees. This is how the Mars family, the Koch family, the Lauder family have preserved dynastic wealth for decades. They don't cash out, they don't trigger taxes. They borrow, they spend, they die, and the wealth transfers tax-free through the step-up basis. But it gets worse, because while they're alive and borrowing, they're also deducting. The interest on those loans? Tax deductible. They're borrowing money to fund their lives, and the interest payments reduce whatever minimal taxable income they might have. So not only are they not paying taxes on their wealth, they're using the system to create deductions that offset other income. They're not just avoiding taxes, they're engineering negative tax rates while living like kings. Meanwhile, you're taxed before you even see your paycheck. Your $400,000 salary, the IRS takes 35% immediately. You want to buy a house? You pay with after-tax dollars. You want to invest what's left? Any gains are taxed when you sell. You want to pass wealth to your kids? Estate taxes take 40% of anything over the exemption limit. You're playing a completely different game with completely different rules, and the gap isn't accidental, it was engineered. The step-up basis rule was created in 1916, but it's been protected and expanded by decades of lobbying from the ultra-wealthy. Every attempt to close it, every proposal to tax unrealized gains, every suggestion to eliminate the step-up has been killed by an army of lobbyists, think tanks, and politicians funded by the very people benefiting from the rule. They've convinced the public that taxing unrealized gains would hurt small investors and family farms, but the proposals always include thresholds, only fortunes above 100 million, only the top 0.1%. The propaganda works because most people don't understand how the system actually functions, and the system is self-reinforcing. The wealth generated by avoiding taxes is used to lobby for laws that protect tax avoidance. The fortunes that never get taxed fund the politicians who ensure they never will be. It's not corruption in the traditional sense, it's the tax code itself, written by and for the people it benefits most. When you hear that the top 1% pays 40% of all taxes, that stat is designed to mislead. It counts only income taxes, and only on the income they choose to realize. It doesn't count the trillions in unrealized gains that appreciate tax-free. It doesn't count the billions they live on. It doesn't count the generational transfers that escape taxation entirely. The stat is technically true and fundamentally dishonest. This is why wealth inequality isn't just about income, it's about the compounding advantage of tax-free growth. Your retirement account grows tax-deferred, but you pay taxes when you withdraw. Their billions grow tax-free forever, borrowed against tax-free, and transferred tax-free. Every year, the gap widens, not because they're smarter or work harder, because they're playing a game with different rules, rules they wrote, rules they protect, rules you're not even supposed to know exist. The craziest part? This isn't hidden. It's taught openly in private wealth management courses, explained in white papers by trust attorneys, discussed casually at family offices. The ultra-wealthy don't hide the strategy because they don't have to. It's legal, it's protected. It's the foundation of how every major American fortune is preserved. They're not breaking the law, they are the law. And when someone proposes changing it, when Elizabeth Warren suggests a wealth tax, when Biden proposes taxing unrealized gains above 100 million, when anyone threatens the structure, the response is immediate and overwhelming. Think tanks produce studies, economists write op-eds, lobbyists flood Congress, billionaires threaten to leave the country, to stop investing, to punish the economy, and the proposals die because the people with the power to change the system are the same people benefiting from it, where they're funded by the people benefiting from it. The Ouroboros eats its own tail. You were told this is a meritocracy, that if you work hard, play by the rules, pay your taxes, you'll get ahead. But the rules are different depending on whether you work for money or money works for you. And the people who benefit most from the rigged system have convinced you that changing it would be unfair, that taxing wealth would destroy innovation, punish success, hurt the economy. But the economy isn't helped by trillions sitting in appreciating assets, borrowed against for yachts and mansions. The economy is helped by money circulating, by infrastructure, by education, by investments in the future. But that would require the ultra-wealthy to pay taxes, and they've structured the entire system to ensure they never do. This isn't about hating success, it's about understanding the game. You can't win a game when you don't even know the rules, and the most important rule is this: there are two tax systems in America, one for people who earn wages, one for people who own assets. If you're in the first system, you pay. If you're in the second, you don't. And the gap between those systems isn't a bug, it's the design. Buy, borrow, die isn't a loophole, it's the architecture. And it's been protecting dynastic wealth for a century while you've been paying your fair share. History doesn't repeat, but if you don't understand it, it'll crush you all the same. If this gave you a new perspective, hit subscribe. The system has the answers, and I'll show you where to look.